Oh, hello everyone, it's Susie, Crypto Granny here. The date is the 28th of the 9th, 2021, and the time in Amsterdam time, the Netherlands time, is right on 6 p.m, 1800 p.m. So today I want to talk about the fiat markets first, because obviously what we're seeing in crypto markets is being absolutely affected by the fiat markets. And, we'll discuss obviously what's going on with the Evergrande group in China, which is causing a massive contagion effect. We'll also talk about what China is doing in terms of seizing all sorts of crypto mining machines and that sort of thing. Also, we'll talk about the US Fed and the government. We'll talk about interest rates and commodities and currencies first, and then we'll go into the news stories for cryptocurrency. We'll also talk about what's happening in news stories there, but also in terms of funding rates, what we're seeing there, social media, the crypto greed and fear index, also Bitcoin futures, Bitcoin call and puts, the dailies on the Bitcoin technicals, as well as Ethereum, what is being sold short on futures, what's the positioning of traders, volatility, liquidity in markets, 3-day stats, 7-day stats, and 30-day stats, and my trading models, and also just my thoughts in terms of how long this market will sell off for. So there is quite a bit to digest. So please go and get yourself a cup of coffee, and let's start this. So the first thing I want to start with is probably we'll talk about the Evergrande thing, because it is a huge contagion effect and it is getting worse. And what happens is this will affect all markets, okay? Even though it affects China, it certainly affects the rest of the world. It affects credit, it affects sentiment. It certainly affects all the revals in credit markets, high yield markets, emerging market debt markets. It also affects risk markets in terms of equity markets throughout Asia and everywhere else. And it also affects commodities and obviously what's happening with funding rates and everything, okay? So it's huge, right? Now, this contagion effect almost smells to me like 2007, okay? Where we saw all these risk metrics in the debt market rising very quickly before the equity people were even onto it, okay? The equity people are always delayed, right? They don't see what the fixed interest people do, like myself, and they're all delayed. They're always delayed in their positioning, right? In other words, they're long, they're still long, and they're wrong. And that's why we saw 2008 and 2009 being so savage, okay? So this contagion effect in Evergrande Group is big, and it certainly affects more people than just property developers. And don't forget, property in China makes up something like 10 to 13% of their gross domestic product, okay? And once one property group goes broke, it affects many other property developers, as well as many other the shadow banking, financial institutions that aren't regulated by China's banking policy. It also affects all the different trust companies, all the investors that have invested in their products for funding. So it is percolated throughout the whole community in China. Now, Evergrande Group basically has up-to-date stats, more than 1,400 projects all around China in 280 different areas in China, 280 different cities in China. And, this is a big thing, okay? Seriously. Evergrande itself has affected something like over 70,000 retail investors. It's affected high net worth clients as well, many high net worth clients. People are demanding their money back. Obviously, the property developers generally fund their property through shadow banks. Now, in China, there's a huge area of shadow banking, right, which is not regulated by the Chinese banking authorities, okay? And this shadow banking basically sprung up in 2017 because the lenders of the banks in China had very strict policies to how much money they would lend out to Chinese property developers and real estate and all that sort of thing, okay? So what happened is a lot of these property people go to shadow banks that create a fixed interest type product for them where they can actually get funding in from high net worth clients, right? So not only do the Evergrande have bonds in the market and they have equity in the market, they're listed on the stock exchange, and they also have bonds with professional investors that invest in those bonds, which haven't got their coupon and may not get their capital back. They also have $6.2 billion that they owe high net worth clients in fixed interest type products, which are tied to Evergrande, okay, in terms of wealth products, right, which are through the banking, through the shadow banking system. Now, you know, retail clients and high net worth clients have sparked nationwide protests, putting Beijing under more pressure to find a solution to avoid this, basically this default of Evergrande. Now, I do believe they will default. I think they're absolutely broke. Their debt levels are humongous, and this contagion effect will affect the $3.5 trillion trust industry as well as the real estate industry within China and the property development industry. Okay, so a lot of investors have not received their money. They've received no interest, and obviously they're protesting because they want their money back. Now, Evergrande owes to retail clients in the quarter four about $1.8 billion of high yield products that were sold to them through trust and to wealthy clients. And there's another $4 billion that is due early next year in January, right? We know that they missed a coupon payment of $83.5 million on the 23rd of September. There's another big coupon payment to the wholesale investors coming on the 29th. And now Evergrande bonds are trading at 28 cents in the dollar. Okay, so if you're holding Evergrande bonds, which are supposed to be, you know, worth 100, it's now at 28.4 or 28 cents to $1, right? And also their stock has been, you know, the stock's lost about 84% already this year. Okay, and this is what happens in markets. This is exactly what happens, right? Now, Evergrande's dependence on trusts and other wealth management products basically extended right into, you know, 2018, 2019, 2020, 21, and they continued to borrow through these shadow banks, okay? And effectively, they've done business with something like about 68 different trust companies in China, which account for something like 41% of their funding. And the thing is, they're going to go broke. There's no doubt about it. So not only do they affect all the retail clients and all the wholesale investment clients that invested in their product through shadow banking, fixed interest type products, they also affect all these trust companies and all different companies around the country, right? It honestly threatens the entire real estate industry. And as I said, that makes up something like 10, 13 to 15% of China's economy. So this is very serious. It's a huge credit event, which is certainly going to affect other markets. And we've seen it already, okay? We've seen it in risk metrics. Risk metrics are up across the board, okay? And rising fast. Not only coupled with that, we see the US 10-year bond go past, you know, literally past the 200-day moving average on a daily time frame, and the US 10-year bond is now at 1.55%. Keep an eye on that because, you know, I can see that thing getting to 220 very, very quickly. When yields start moving up, they move up very, very fast. Also, we're seeing a massive steepening in interest rate curves, okay? Bond yield curves and interest rate curves. There's many different types of interest rate curves, but we are seeing massive steepening, which means the long end, which was an inversion, is suddenly going positive and up, okay? And we're seeing the rate of change in being quite large, okay, as a rate of rechange, right? We see it right across the European countries. We see it in emerging market countries where their short-term funding rates is skyrocketing, which tells me that emerging market countries are also going to be in a credit crunch, okay? And this is exactly what brought down the equity market in 2008 and 2009. And this is why I've been telling people to get out of the equity market. The risks are huge. The equity market can come up off a lot, like 2,000 index points, massively, right? The NASDAQ and the Dow and everything else, the S&P, right? But not only coupled with that, you know, we have the federal leaders out there, you know, saying that interest rates will rise. You had Bullish out there last night saying that there will be 2 interest rate hikes next year. And often the interest rate curve gets there before these hikes actually take place, okay? Because the bond curve has been very expensive for a long time, all right? And honestly, it can give back so much. I mean, if you look at the if you look at the German curve, it's still in negative, and that thing can go positive very, very quickly. Not even to mention all the bondholders that bought bonds at a negative coupon, which is just crazy, and a negative interest rate. Those guys are going to lose so much money, it's not funny, okay? Now, Fed Chairman Powell told the US Senate that supply bottlenecks in the system have lasted longer than they expected, and that inflation remains high, but they expect it to drop. I mean, honestly, what drugs are these people on, right? Inflation is stagflation, right? We have stagflation in the system after 20 years of prices going up everywhere. A 10-year bond rate, and I've said this for ages, should not be at 1% or 1.3% or 0.7 or 1.55. With inflation, stagflation we have in the system, a 10-year bond rate in the US should be at least 10% or more to reflect that, okay? The federal and the SEC and whatever the governments have not got a clue. Inflation is here and everything is going higher and higher. As I said before, food's up, the cost of living's up, soft commodities are up, hard commodities are up, oil's up, natural gas is up, everything. What don't these people know? Seriously, they're just a bunch of, they've got no idea. Also, they're talking about unemployment going down to 4.5%. What stats are they looking at, people? Seriously. Honestly, these people have no idea. Their statistics are just wrong. If you look at the US debt clock, okay, go and take a look at it, people, US debt clock. According to that, in the US, there are 332.698 million people, okay? And out of that, 153.220 are employed. What about the 179 million people that are not employed, which makes up 54%, okay? 54% that are not employed. 54% cannot be all children. You know, it cannot be all women looking after their children. I mean, you know, we know that there's pension people in that. We know that there's people that are retirement. We know that people live in poverty and that are on food stamps. But the reality is, where are the 54%? Even if you said 20% or 30% make up children or women not working or people not working, where's the 20% that is unemployed? The unemployment figures they are sprouting out, the statisticians or whatever, or the economists in the US, are just garbology. So just like inflation, which they believe is at 2.2%, Fed income, it is garbology. The stats are bullshit, I have to say. Sorry for swearing like that, but they're just garbage, right? And, you know, I would hazard a guess that the US unemployment rate is something like 25%. That's the real figure, right? So what you've got here is an economy that's broke, right? Unemployment is rising astronomically at 25 or 26%. And you've got stagflation where the cost of living is through the roof, right? And all this is done, and also coupled with that, they've manipulated the bond curves and the interest rate curves for years, since 2008, right, to make risk markets go through the roof and to make risk markets like the equity markets so overvalued, plus corporate debt, high yield debt, and everything else, that, you know what, there's only one way to go here. Those risk markets are going to go down, 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 right? We are in a worse situation now than we were leading into 2007, 2008, 2009, right? The difference was then companies were going broke, but now central banks are going broke. And the genie is out of the bottle, okay? That US 10-year bond rate will go higher and higher. And with that, the equity market in the US, which is expensive on every measure you look at. So expensive that thing can tumble 2,000, 3,000, 4,000 index points. Yes, we will see dead cat rallies. Yes, we'll see more volatility. Yes, it'll suck people in. But the smart money is getting out of the equity market fast, because the smart money knows this thing is going to come down so hard it is not funny, right? Not funny at all. Now, this is one of the reasons myself and my patrons are not in crypto at the moment. The risk is so high, right, that, you know, the crypto market could come off, you know, 40%, right? 40%. And that's why I took a hit of a small loss, even though I'd made other profits, because it was worth it. This market, the crypto market, is on tenterhooks, right? If it breaks certain levels, it's all over, seriously. The traders are still ultra long Ethereum. Ethereum will underperform Bitcoin, absolutely. And I'll tell you why when I get to the crypto section, okay? So the thing is, we've got commodities going through the roof. We've got natural gas going through the roof, right? We have bonds going through the roof. Natural gas is in short supply, okay, to heat houses and power industries. And there is a bidding war going on for natural gas, which again hits the consumer pocket. This is inflation. I mean, these guys in the Fed and the economists must be absolutely stupid. What else can I say here? This is inflation. Oil is through the roof. Petrol is through the roof. Inflation, you know, the cost of food is through the roof. What else do they need to look at here? The cost of lumber is through the roof. Housing is through the roof. Housing year on year in the US is up nearly 20%, right? I mean, seriously, for them to come out and believe that inflation is at 2%, just like, ECB Lagarde, they're all singing from the same hymn sheet and they haven't got a clue. Everyone I talk to in the real world is really feeling the pressure of price pressure, right? Everything is expensive. Everything, right? In Australia, you can't get wood. It's gone up 100%. There's, in the Netherlands, right? You go to the shop, every week you go there and something's more expensive and there's stuff not on the shelves. And it's being exacerbated by this supply chain dislocation, right? Transport, the cost of transport is through the roof. Just look at the Baltic index, which is the freight index. I've never, ever seen it so high. The cost of transport is through the roof. Mail something to Australia, the cost of, sending anything to Australia is through the roof. It cost me something like, just to send something, 220 Aussie dollars. It's just crazy, right? I got a water bill in Australia. Everything's going up. And these idiots continue to call this rhetoric low inflation and low unemployment. It is garbology. Every time someone goes for a job, a young person or whatever, there's thousands of people going for the same job. I mean, seriously, it is just a joke. And then they wonder why people don't want to work when the benefits they're getting in the States are higher than their wages. Fair income. These people just haven't got a clue. I've got to tell you this. And it makes me cross, I have to say. It makes me cross. Now, also topped off with that, the Congress has to raise their credit card because the US has borrowed too much and they're not paying back their borrowings to the rest of the world. So they have to go to the Congress and the Senate to get an increase on their debt ceiling, their debt limit, right? And that's got to be done by the 18th of October. And if they don't do that, and if it's blocked by the Republicans, all hell is going to break loose because the administration, the US government, can't pay anyone, okay? And this thing comes up every couple of years. And this thing by itself can move markets down, risk markets particularly, right? And, again, the US is spending beyond its means, right? Beyond its means. And they have nothing backing the balance sheet. And on top of that, they're talking about tapering, taking money out of the capital markets to support, the rich equity, traders and brokers, right? And the wealthy people, right? But it's going to fall like a brick, people. Like I said, up the stairs, down the elevator, and over the cliff. When markets sell down, they sell down savagely. And they always, with my 40 years of experience, babies in the woods, they always sell down more than you would ever believe, okay? Markets always sell more than you would ever believe. This is why I'm not getting sucked into buying crypto, okay? I've said it's a dead cat bounce a week ago, which it was. And, once it's hits certain support levels, it's going to cut through there like a knife, because the big traders are still long and wrong, okay? Long and wrong. And even in the equity market, they're still long and wrong, okay? And they barely have any put protection. It's going to be savage, people, savage. Now, not only that, there was 2 federal presidents that are retiring on the 30th of the 9th, right? And listen to this one, Fed income. I'm gobsmacked. I really am. Federal President Kaplan and Federal President Rosengren. They're both retiring on the 30th of September 2020 because, they've been looked at and pressured because of their trading activities in 2020. Now, honestly, this is insider trading at its worst and front running. How can these Fed presidents be allowed to trade the market when they know exactly what is happening with monetary policy and what the Fed is doing, right? That is insider trading, and these people should go to jail. You cannot tell me that they could not profit from that when they know the Fed is ploughing money into the system and buying the bond curve and reducing yields. With that, the stock market goes up. They've got an insight to track to what monetary policy is doing and what the Fed is doing. This is insider trading and front running at its worst. And what they do, because now people are asking about their trading, their incredible trading activities. I mean, shouldn't they be focusing on, the activities, the government and the balance sheet? No, these guys want to, increase their wealth by trading the equity market. But they know what the Fed was doing, for Christ's sake. I mean, this is just ridiculous. If you're a trader in markets, a professional trader, and if you're insider trading or front running, right, you can go to jail. I mean, this is serious stuff, and I cannot believe this, that no one questions this stuff in the media. And you know why? They don't, because they just don't know anything, right? These people should not be allowed just to retire on a huge, big pension and be actively trading markets, risk markets in 2020 or 2021 when they know exactly what the Fed was going to do, right? It's just balderdash, man, balderdash. Now, also, if we look at US yen, it's up 111.32 because interest rates are rising very, very fast, okay? And they will continue to rise very, very fast, okay? And the equity market will come off like a rock. Already the Dow this month is down 2.3%, the S&P down 3.1%, the Nasdaq down 4%, but it's not enough. The Hang Seng is down 5.3%, the emerging markets down 5.4%, Swiss market down 7.2%, but we will see these markets down 10, 20%, easy people, easy. And with that, it's going to affect crypto markets as well, okay? Because every market is affected by sentiment, relative value, risk metrics, and cash, okay? So let's go back. Let's go to the Bitcoin cryptocurrency market and let's talk about that, people. Let's go to Live Coin Watch, and what do we got today? We see that market cap has come down quite a bit at 1.890, okay, trill. Volume is 68.822 bill. Liquidity is coming down at 4.745 bill because people are taking their money out of the crypto market. And Bitcoin dominance will continue to rise 41.55% as alts sell off and as Ethereum sells off and everything else, right? Now, if we look at Mazari, and that tells us a lot as well, US Tether did 17.5 bill, Bitcoin 5.29 bill, Ethereum 4.95 bill. If we go to Solana, 1.47 bill. We've then got Polkadot, Filecoin, and XRP, 569 mil. If we go to the 24-hour trading clock on Bitcoin, we see that the low on Bitcoin was 41553, okay? Got to a high of 44,054. Anything over 44, they're selling it, right? But the big level on Bitcoin on the daily is the 200-day moving average on the daily at 39429. 39429. If she breaches that, this thing could get down to 29,000 very, very fast, okay? Because wholesale traders have been buying Bitcoin and Ethereum all this month and last month, and this will create a reaction where they will sell their positions and drive Bitcoin down to 29,000 odd. And I think there is likely a 99% chance of this happening, given what's happening in other financial and fiat markets, okay? Absolutely, right? Now, also coupled with that, China has stopped the Chinese miners. Now, don't forget, the 5 largest miners in China mine Bitcoin and Ethereum. And this is a disaster, particularly for Ethereum, okay? Because 2 of the largest Chinese miners have been stopped mining, right? Which means they've been stopped by the Chinese government for mining Ethereum. Now, in my mind, and I've called this many, many times, Ethereum at this level, 2869, is too expensive, okay? JP Morgan came out with an article, and I believe that. They had a valuation of 1,500, and Ethereum should not be here. It is still proof of work regardless of the upgrades, and they rely on miners, and these miners are being shut down. And the fact that Bitcoin and Ethereum still use the same miners, you can see what's going to happen here. The miners are going to cherry pick constantly between Bitcoin and Ethereum. It's a disaster, particularly for Ethereum, that has all these DeFis on it, all these tokens on it, you know, whatever, NFTs and whatever. And honestly, what you'll find is Ethereum will lose even more clients because, you know, now there's massive competition for the miners that exist, right? And a lot of the miners went to the US, right? And it's not only that. China is stopping people from buying mining equipment. They seize mining equipment in Mongolia, something like 10,000 crypto mining machines. They've also told Alibaba, who sells mining machines and anything to do with it, that they have to stop selling these to any local in China by October the 8th. They've also stopped people from looking at cryptocurrency platforms. They've blocked them in terms of TradingView, CoinMarketCap, CoinGecko. You know, they are coming down hard on everyone, right? In China, you know, everything's illegal in terms of crypto, right? Everything. They're not allowed to domestically mine or do anything, right? And this is going to be a disaster for Ethereum. Absolute disaster, right? And I think, and also when we look at the option positions on Ethereum, you know, the wholesale traders are long and they are going to bleed a very bad death if they haven't cut their positions. They have cut some, but they're still long and wrong, okay? Also, we've seen that a lot of Chinese that still want to trade the market have been using DEXs, decentralized exchanges, to trade on like DXDX, and the trading volume has gone up. But again, you know, the Chinese will stop doing that. You know, they'll stop them from doing that as well, okay? This is, you know, problematic. And, you know, it's going to be, you know, an absolute disaster, right, for Ethereum particularly, okay? That's all I can say. And at Ethereum, I've never liked, and don't forget all the fund managers are loaded into Ethereum, and they're just wrong, okay? Now, let's talk about something else now. Coinbase users can now deposit a percentage of their paychecks into the crypto exchange directly. What else we got here, guys and girls? Crow.com. Gareth Bale, who's a very well-known soccer player who plays for Real Madrid and he plays for the Welsh team, is now, his NFT is going to debut on crypto.com with autographs, trading cards, and all that sort of thing, which is great for him. So Crow is not only going into NFTs and that sort of thing, but so many other people are as well, and it's all to do with soccer and that sort of thing. Also, Ripple versus SEC. Now, the chairman of the SEC, Gary Gensler, oh my God, don't start me here, people, Fed income. What don't these people understand? You know, this idiot keeps saying crypto regulation is clear, right? He's not listening. You know, Mr. Gensler, you are not listening. You're just like an academic that doesn't listen. You know, middle-aged, white Anglo-Saxon Protestant male who's arrogant, and you're not listening, baby. The CEO, Brad Garlinghouse, said, no, the regulation is not clear. And of course it's not clear. It isn't clear. The SEC never told XRP why it was a security, okay? Why it wasn't a non-security like Ethereum and Bitcoin. When all the regulators at the time had a vested interest in Ethereum, okay? So, Mr. Gensler, it is not clear. It's about as clear as mud. You're not listening. Wake up, Australia. Fed income. Wake up, Australia, man. I tell you, this just irates me. You got all these idiots in power. What else can I say? All these idiots in power that have no idea. You know what? You could literally put your child in there or a monkey and they'd do a better job. I'm serious, right? You know, put in a monkey or a child and they would do a much better job. My pussycats, if they were still alive, would do a better job. Fed income. Okay? They still haven't explained why XRP is a security, you know? And, you know, they refuse to provide any detail of what Ripple's asked for simply because they go, oh, we've got, you know, because we're the SEC, we've got important precedents that we can hide behind, right? I mean, it's just garbology, right? Garbology. You know, Mr. Gensler is not listening to Brad Garlinghouse, the CEO of Ripple XRP, and Brad Garlinghouse said we would only settle unless there was an absolute certainty what XRP is going forward. And if they call them a security, then rightly so, Mr. Garlinghouse wants to know why. And what's the difference between Bitcoin, Ethereum, and XRP? But again, the SEC, like the Fed, are a bunch of arrogant twats. And they don't listen to the market or anything because they don't know. They're academics and they have no frigging idea. Now, the Peruvian stablecoin has launched on Stellar on a platform called ANCLAP. And also the Chilean Colombian stablecoin, and I hate stablecoins because it'll be their own fiat currency, which is terrible, okay? Or what else can I say? Very sorry cutting that off, but if you'd like to hear the whole podcast and get all my information on Patreon and reviews and all sorts of things, please join my Patreon. It's Crypto Granny on Patreon. You can see what's available there, and it would be very, very much appreciated. Thank you.